world moves fast. Your workday? Even faster. Pitching products, drafting reports, analyzing data. Microsoft 365 Copilot is your AI assistant for work. Built into Word, Excel, PowerPoint, and other Microsoft 365 apps you use. Helping you quickly write, analyze, create, and summarize. So you can cut through clutter and clear a path to your best work. Learn more at Microsoft.com/M365 Copilot.
Reality radio for a really great future. We're talking real money.
The things that many in the financial services industry will stoop to make not just a buck, but apparently a lot of bucks. Hello, everybody. I'm Don McDonald on the show that's all about the bucks, Talking Real Money, the podcast, along with my co-host Tom Cock right there in the studio. And by the way, sir, you need a little paint touch-up on that wall behind you. Just right there.
Yeah, that looks horrible. I've never noticed that before.
Look at that
That's
wall.
I know.
Do you have like a
shows you what kind
somewhere?
of operation? This is a flim-flam, shim-shim operation. Sorry.
Good thing this is not, I was going to say radio, but it's not radio.
Yeah,
it's
not
podcasting.
radio. And it's not television. So
all right.
Thank goodness.
If you're a new listener, you may not be aware of my great hatred for so much of the financial services industry. Not necessarily all of the individuals, but the industry itself and some of the individuals who know damn well they're not stupid, that they're bending the rules, taking advantage of people, and, well, in many cases, flat out lying. And one of the tools that I believe, in my First Amendment, hopefully protected opinion, is one of the organizations that really promulgates misleading financial information, is a group that is, I don't even know how they get formed as a flippin' nonprofit. It's a group called the American Financial Education Alliance, as they call themselves, quote, one of the fastest growing nonprofit financial wellness programs in the country. Funny thing is, though, they're selling themselves to investment advisors because the next sentence says, our unique no-selling approach, coupled with strategic alliances, will change the way you think about financial education. You see, that was geared toward people who are financial advice providers, a.k.a. investment salesmen. I just don't like this stuff.
You act like you're surprised, but I mean, this is the matchbook cover degree, right? That there are thousands of these. This is nothing new. They come up every week.
But the thing is, I mean, it's set up as like a charity.
Yeah, I know. Acts like it's a charity, I guess. I haven't looked into the organization, but people stand with these degrees and say, well, or certifications, designations, and say, look at me. Look what I'm an educator. I'm not here to sell you anything. And then we get the email that we did from a listener, and it turns out, well, not so much. They're actually, yes, they are going to sell you something.
Yeah, and what you do, you join it as a, get this, ready? I'm looking at their request to join as a chapter president. Well, the thing is that the people hold themselves out to be the chapter president, but you buy that. You get to buy your way into being a chapter president. You don't earn it. Well, you do, but you earn it by sending them money. So anyway, we got a nice note from a listener who, regular listener, sent me the flyer, and I've gotten these same flyers from the American Financial Education Alliance chapter president, inviting me to a yummy dinner. Well, he sent me his, and it's just exactly the same pitch coming from this nonprofit education alliance, which is really, again, just a cover for sales pitches. They're liars. I mean, really, they come right out and lie. The no sales approach. Come on, what are you doing in the seminar?
Well, the mailing suggests that there might be some selling involved. The reading of it suggests that there's some selling involved here. And frankly, the approach is not new. This is how many advisors have approached the public really for decades using direct mail, right?
Right. And here's the thing. When you send me these kinds of things, I can't resist. It's my inner private investigator. I just want to be like a PI. I want to be Magnum. Well, without the mustache. But so I did some research. And this was for an investment advisor registered with the SEC.
The person that mailed the piece out.
Yeah, he's from the advisor's from Eastern Maryland and Delaware.
Sounds like the ocean to me when you say Eastern Maryland, but okay.
It's land. It's still land. If you go past Delaware, you hit ocean, or south in Eastern Maryland.
South,
like Ocean City.
Yeah.
Okay, anyway. Geography lesson aside.
Thank you.
I looked this guy up. The things you want to find out, and this is what this is about, how to help you figure out these people, to do your own investigation. One, I always start by going first to BrokerCheck.org.
And anybody can do that. You can look up, and you can look us up there. You could look up anybody to find out.
Not me, because I'm not registered anymore.
Oh, okay, but I'm there.
Yeah.
Yeah,
I think I'm there. I'm just not registered anymore.
Yeah. So, but that would be a place to look up any person who's giving you advice or wants to take you on as a client. I'll put it that way.
What I was able to determine about this particular investment advisor was that via BrokerCheck, they are not FINRA registered, which means they don't sell stocks and the like for commissions. They're not a broker-dealer. So they're just a registered investment advisor. So they register with the SEC and the states, but they're not regulated by the SEC, and I'm going to get into that in a minute. That's I shouldn't have even mentioned it right there. But I found all of this information on their Form ADV at advisorinfo.sec.gov. I looked up the firm, checked out their Form ADV Part 2. You can discover some really interesting things there, Tom. One, I discovered that as an investment advisor, this firm that has 3 offices, advertises on 5 radio stations and 3 TV stations, has assets under management of just $81 million. Now, in the
and how long have they been doing it? How long have they been around?
This is another point of contention. Their ADV doesn't match their claims. But they've been around for according to their ADV, about 7 years, and it appears much longer.
All right. Yeah, that's not very many. In the world of asset management that's small, our Bellevue office manages about $1.2 billion that Don and I started 15 years ago. So by comparison, that's pretty tiny. And we're not huge either, by the way. So
no, we're not huge. So $81 million is a very small firm. Typically, $81 million is a sole practice.
Correct.
In the investment advisory industry. That's some one person who acts as an investment advisor to a small group of clients. Mm-hmm. Well, in this case, I am confident in stating that even at their highest fee, which is a ridiculous 2.5%, and that was in the Form ADV also. You can look, it's right there, fees. Even at the highest fee, Tom and I both looked at the math, and you could not run an office. Oh, no. I'm sorry, 3 offices with
and
more than
5
12, 13
stations.
Employees and pay for ads. Yeah.
TV, et cetera. No, wouldn't work.
There's not enough income coming in from those clients. It's just not possible. So I thought, well, gee, I wonder where the guy who owns this firm lives. You can look people up. It's really easy. So I looked him up and I found his house in Maryland, which is a middle-class, $500,000 house. But I found out that his place of residence, what state, he works in Maryland, but what state do you think he has his domicile, his declared residence? Where's he registered to vote, Tom?
Wow, that is a great
question. Think about it.
Delaware, then.
No.
Delaware.
Think about it. He's on the East Coast. He has a house in Maryland. Florida. What is it in the winter in Maryland? Right. What state do you go to if you want to protect your assets and not pay income tax?
And be warm in the winter.
Yeah,
that would be Florida.
So I discovered this guy has a really, really nice house in Lakewood Ranch, Florida, which is a very nice community.
Like what sort of value there?
Well, it's Florida, okay? So bear that in mind. And
here.
It's not Boca Raton or West Palm or that area. $2.4 million.
Wow.
Wait, now this is a guy who's a mediocre advisor at best, with 13 employees and 3 offices. How in the world does he pay for a $2.4 million house in Florida?
The numbers don't make sense.
No,
I agree.
the math just doesn't add up. So, what could be the answer? I see hands going up all over the world. Look at that. Look, there's a couple of hands in Europe that even know.
Sweden says, we know.
What do you think? What do you think this guy does to make money, Tom?
I'm going to go on a wild guess here and assume that it's some sort of insurance product that pays out a healthy commission.
Ladies and gentlemen, Tom got it correct. It is once again indexed annuity sales. The story that you can tell people, and it's all, you can see it in the flyer, okay? Helpful strategies for navigating market volatility.
Hard-earned money won't lose value in market downturns.
Oh, wait, there's another little hint as to what you're getting. And how it's, the final paragraph here, how is it, learn how it's possible to grow your assets without exposing them to market volatility. So
market-like returns without the risk of the market. That's what they're saying.
So they're going to say, stock. No, Tom, what are they actually going to say? No. Now, remember, they're saying it verbally. They're not putting it in writing.
Stock market returns without the risk of the market?
Bingo! I've seen the chart. And the chart, they showed the market from 1929 to today, except they forget to include dividends.
Small 1.5% to 2% add-on per year, yes.
So they show you that you could have done better with their annuity than you would have in the stock market with no risk whatsoever, which is, well, it's problematic, isn't it? I mean, it's hard to get the return of the stock market and pay a 8 or 9 or 10% commission to the salesperson and provide huge profits to the insurance company and still match or exceed the stock market with no risk?
Nah, that doesn't work. By the way, our listener who sent us this is from a gentleman in Salisbury, Maryland. You know who you are, and thank you for taking the time, because there's a lot of time went into it. He points out that he went to one of the classes, right? He read up on it and managed to, in his words, avoid being sold product from Genworth and ING Annuity and Life Insurance Company that he would have paid for with an advisor fee on top of
No.
Nope. That's what he says.
Yeah, no, I checked their ADV, and they don't charge advisory fees on the insurance products.
Oh, well, that's very kind.
Yeah, so they don't charge the 2.5%. By the way, that is their maximum stated fee.
Wow, that's
2.5%. Yeah. Is that high?
That's, in terms of the industry, way, way, way high.
More than twice what normal high is.
Yeah, that's nuts.
So that's the result of my investigation, and the resources are there for you to do the same thing. And it really didn't take me all that long. I think it was a couple of hours, and I was looking into his real estate holdings. I was looking at his LinkedIn, his connections. I was trying to find out what he did. There's a big gap in his SEC record.
Yeah, which is a bit odd.
Which means that he was probably making a living merely as an insurance salesperson, but realized that there is a negative connotation associated with just being in the insurance industry, and he got smart and realized that if I just register as an investment advisor, that's what I wanted to mention. Because he only manages $81 million in the past couple of decades, the SEC has said we're too busy to regulate people with.
You're too small of potatoes.
Yeah, if you have under $1 million, $100 million under management, we're going to let the states in which you do business manage you, regulate you. So he's SEC registered, but not SEC regulated.
Yeah, and the problem for many of you is you get this flyer, right, or postcard, I guess, of what it was, with the pitch that we just mentioned. But then on part of it, it says, meet your host. Here's a quote. There are a lot of people out there doing financial work, says this advisor, but only a small percentage are fiduciaries. I think being held to the fiduciary standard is a must these days because we're required by law to put our clients' interests first. Too many financial people are merely salesmen, and I believe clients need an advisor who must be on their side. Now, you read that and you think, yeah, that's exactly right. That's who I'm looking for. So it's confusing to people.
He is actually calling himself out, claiming to be something he's not, when he is, in fact, he is merely a salesman. And in this same piece, he says that he is a licensed fiduciary. Now, I also did some checking on that. Right, I wanted to double check. There is no such thing as a licensed fiduciary. No one has a right to call themselves a licensed fiduciary. As a matter of fact, if the SEC was regulating, which they're not, it'd be the state of Maryland, they could write him up for making a claim like that if they had the ability, and two, the people to actually enforce these kinds of things. But these are low priority. But he can't claim that. He is not a licensed fiduciary. Anyone who says that, that's another red flag. If they say they are a licensed fiduciary, they are a lying licensed fiduciary.
And part two of that is we've known advisors who have said they're SEC approved. There is no such thing as being SEC approved in any way, shape, or fashion. So, okay, because he's on the radio and television,
5 radio stations, 3 TV stations.
And I'm when I think this through, I'm reluctant to say what I'm going to say because we're on the radio.
I know.
We're on a podcast.
I know.
And there are people, and I just met with one last week who said, I came to you because I've listened to you for 10 years and I believe you, I trust you. You seem trustworthy. So this guy, I'm sure, I didn't listen to his program, but I'm sure he sounds trustworthy on the radio.
Not really.
No?
Not really, because he's another one of these guys who has hired a firm to create his radio shows. It's a company out of Kansas that produces his radio show, and they've got a woman who claims to be a network radio host who asks him some questions. And if you listen to these, they all sound the same. We have one guy making the same kind of claim, selling the same kind of product, who's on the radio here in Central Florida and who's on, Sunday morning right after Face the Nation. Boom.
Sure.
There he is sitting on a TV set with some paid host to tout. Well, not even tout. All they do is speak in platitudes and vagaries. And then their goal is to get you to a meeting, because you got to come to this free meeting, because we're going to show you one-on-one how you can avoid any downturn in the market and still make the returns of the market.
Yeah, so I guess what I was trying to say, too, about that is it's not just how they say it, it's what they actually say. And then you need to check the registration. Then you need to get the specifics before you just say, sure, I'll sit down in a meeting, because also they're really well trained. If you get into a meeting with them, the likelihood of them selling you something is probably pretty high, right? Because that's what they do.
If I could implore all of you, particularly those of you who don't listen really closely or like doing something else, if I could implore you for just a minute to pull in close to the
huddle around the radio.
Pull in close to the no, we're not radio, we're podcast. Pull in close to the iPhone or the iPad or the computer speakers, or punch your little earbuds in a little tighter, or pull down those headphones. Listen to me really closely. All that stuff I told you to do, you really shouldn't even have to do all of that if you would just do one thing. Stop believing in financial fairy tales. Because anytime anybody anywhere, that was tough to say. Anytime anybody anywhere tells you that they can offer you a higher return with no risk or low risk, odds are.
Or returns of the market with no volatility.
Yeah, well, that's no risk, basically. So if they tell you these things, just do this. Try this. Don't believe them.
I was going to say, take the steak, head for the door, and say thanks a lot. It's been fun. So get out of it.
Can I get that steak on a stick?
I'm out the door.
I'm out the door.
Yeah. All right. Great advice.
These things, every time I see them, and do I get them in the mail a lot. Because what am I? I live in a relatively well-to-do neighborhood, not super affluent, just relatively well-to-do. I am in my 60s.
Yep.
I have a reasonable net worth. They know these things. It's easy to look me up. Mm-hmm. And I'm invited to these all the time. Now, I could go because it says, it's funny, it says on many of these, no investment advisors allowed. Yeah. Well, I'm not one anymore. I'm just
That's a good point.
I'm just a guy on a podcast and the radio.
Just looking for a free steak.
So I may start going again. This is what I should do. You ready? I could make myself look even older than I already do, which is plenty old. And then I could get like a walker or something and go in and go. And then I'll have my AirPods in it. I'm a little hard to hear. And would it be okay with you if I recorded this whole thing?
Oh,
so I don't have any questions.
I can listen to it later.
Would that be okay?
I bet they would say. I bet they'd say no. I bet they wouldn't let you record it.
I'm 93 years old, and if I don't buy this annuity now, I don't have a lot of time.
They're never going to buy the 90. You don't look a day over 80. There's no way.
Oh, thanks. Hey, I'm feeling young now, ladies and gentlemen.
That's not going to happen.
And that wraps up this edition of Talking Real Money. It's been nice having you all here with us today. And tomorrow, well, that'll be I don't have to tell Tom when we're recording because
Good point.
He would have no idea how to put the podcast up without me.
No, that would I record it. That would be the starting point.
Well, you could record it. You've learned to record. You've got your little baby mic there.
Not
well, but you do record.
That's a good point.
The problem is you don't have a clue how to put it on the internet.
Speaking of Maryland, we got a question from Ricertown, Maryland, from Ari. He says, I learned about and invested in AVDV, which is the Avantis. I always forget DV.
I don't know. Do I have to look it up for you?
It's one of the international funds, I believe. AVDV.
I don't
By listening to your podcast. Thank you. I'm concerned about one
small
thing.
Small cap value, sir.
Small cap value is AVUV.
No, I'm AVDV.
AVDV. Is it international small cap value?
International small cap value. That's what I'm saying. International small cap value.
He says, I'm concerned about one thing, and that's the large portion of their portfolio in gold and other materials. I believe you dislike gold. So do I. Well, I never said I dislike it. I just don't keep it as an investment, not the gold.
I like the stuff
asset.
that's on my finger.
Kindly discuss this if this could be a problem of the success of this ETF. Thanks again, Ari.
Well,
I was unaware of that, and I did not look it up prior to this because I usually try to take these off the cuff as we do on Saturdays, by the way.
Because then it's more fun. It feels like a challenge.
Yeah.
It feels more challenging. Let's see. Oh, my goodness gracious sakes alive. You know why I think they own so many gold stocks? I think it's because of the value tilt. That's what it looks like to me.
So they don't own gold per se. They own companies that mine gold and process gold, and they're in the business.
No. And here again, this is where we need to split the hair slightly. We don't like,
which can be painful, by the way, but okay.
We don't like bullion or coins as an investment.
Thank you.
If you like them as an inflation hedge or as a hedge against Armageddon, okay, good for you. Have fun. We don't. However, gold mining stocks are businesses that turn a raw material, that get it out of the ground and then turn it into something that they can sell at a higher price. That's just another business to us.
Yeah.
We don't have an opinion. By the way, ask us anytime. What do you think of technology stocks? What do you think of medical stocks? What do you think of consumer goods stocks? What do you think of energy stocks? What do you think of gold stocks? We're going to say we just want you to own them all.
Yeah. We don't know which one will be best, and we're in all those industries.
And here's the thing we do know about Avantis is that they apply screens. So if they're overweighting gold right now in their portfolio, which it appears they have some pretty big gold stocks in there, it's because they made it through the screens.
They have a disciplined approach. There's no stock picking there per se.
No, they didn't say, gold's going up, so let's go buy some gold.
Yeah. No, they didn't. So we trust the process that they use, and we trust them.
Now, I better take that back. There's a momentum factor.
Yeah,
in there
that's right.
too.
So that probably
if gold stocks
into it.
have been doing well within their momentum screens, they would possibly end up in the portfolio.
Overweight.
But they're probably there because one of either dividends, which makes them a good value stock, or because they met that momentum thing.
Yeah.
Or not even dividends, just that they're undervalued assets. So.
Gold Hill, Oregon. Tara writes
speaking
us,
of gold, isn't that ironic?
I know.
I mean, we had a Maryland
planning by
we had
me.
a Maryland
I
topic.
Did that.
Then we had a Maryland question.
I know.
And these are just coming up randomly, right?
No, I put this.
Oh, dang
Come
it.
on,
Okay.
man. All right, stop it.
Trying to sell it to
Tara,
the audience.
Gold Hill, Oregon says, is the Schwab 529 plan a state-sponsored college savings plan administered by Kansas State Treasurer Stephen Johnson and made available by Charles Schwab a good plan?
Yes.
I'm wanting to open one for my granddaughters. I have not called Schwab yet. Thank you, guys.
Yes.
Schwab 529 plan. I don't know it.
I do. It's a fine plan. It's got all the good
They
stuff
use
available.
Index funds and
you can use your index
age-based.
funds, your age. They have a wonderful age-based option.
Inexpensive,
They're
no
very
commissions.
inexpensive. I mean, get this: $0 in opening or maintenance fees.
Okay.
No service fee. If you get into their own management program, you can have a managed account like a investment advisory account.
Yep.
And that can be from 0.2 to 0.8, depending on the investments you pick. So it's a very low cost product with great options, and the trading fees are zero on all funds. The one source funds, all ETFs. And so
what do they charge for the age-based program, or can you find that?
I'm trying.
Which is what we would recommend.
I mean,
because again,
their ongoing fees for the age-based are zero.
Well, they got to charge something somewhere.
I'm looking for the funds themselves because it's going to be the funds.
Yeah. So, but let me finish. The reason we like you to use an age-based plan is it's easy. You simply have to enter the age of the beneficiary, and then they do all the work. I'll give you an example. My daughter will be heading off to college next year, and I just looked. Her portfolio is about now half in stocks, half in bonds. They go to more fixed income as the child gets older, and the money will have to start being drawn out of that. I think I look next year, it's going to be like 40% in stock. So that's why we like age-based. And nowadays, you can get those plans very inexpensively and without any commissions. So they're good plans, done correctly.
Checking here, it looks like they're index-based, age-based products are 0.2% a year.
Dirt cheap.
Yeah,
So
it's
nothing
very
wrong with
fair.
that.
It's very
So yeah, go ahead, Tara. That's good. From Evans, Georgia, Brian writes, as Tom and Don, with the recent popularity at large in private equity and regulatory changes that will allow common investors to participate in private equity and private lending funds through their 401ks. That has not been established yet either, sir. Do you feel there are any concerns for us conventional investors in small cap value indices? I have a modest percentage invested in AVUV. Well, I'm not interested personally in taking on private equity. I've heard some honest investment pundits suggest that potential rise in private equity interest and access to those investments may result in hot value companies to be usurped by private equity and therefore unavailable to index value funds, ETFs. Appreciate your thoughts. In other words, these guys are not going to let those companies go public, and so how do we get?
Yeah, well,
is that a problem to the index?
That's apparently somebody, a producer on CNBC, trying to fill 24 hours a day, 7 days a week with something. That's just the silliest. It's one of the sillier arguments there can possibly be, considering the multi-trillion-dollar size of the markets.
Yeah,
and the fact that private equity is a really broad category. It's not just, Bain and Company swooping in and taking firms private. It's all kinds of different securities. So if you see some numbers bandied about private equity, it can be other types of funds in there too. Much ado about nothing.
No, okay,
is
but
always
the question
my
at
feeling.
hand is, I think that there's a fair question. There are fewer companies that are publicly traded today than 20 years ago, and there are, in many ways, fewer companies going public than there were 20 years ago. Will that affect the small cap value index?
I don't see how, because I still believe there is no reason to disbelieve this, that the public markets are where you go if you really want to realize the underlying value of your company. You notice that this happens a lot. A company will go private for a while, and then they'll build up their asset base, and then they'll take them public in a new IPO where they cash out and make lots of money. This is a game that is constantly played on Wall Street. It's not a trend toward everybody going private. The reason everybody can't go private is because there is no effective relatively subjective pricing system for private securities.
And we just had a shareholder meeting this week, so we understand that very clearly.
Small companies are hard to value.
They're hard to say. Is it 18 times? Is it 22 times?
Yeah, you make up numbers.
Who knows?
And the worse the market gets, by the way, the worse private equity is likely to get hit.
And don't believe us? Go take a look at 08, 09, see what happened to those small private companies.
These are
not fun.
This is another perfect example of why I carefully filter my media consumption, because you can be overwhelmed by all the minutia and the stupidity of media outlets trying to fill time with something.
Fill space.
Yeah.
You see it at the Wall Street Journal, too, so it happens. All right, that's all the questions we have for today, sir. We have done enough, I think, for one podcast.
We've done enough damage. We're over 30 minutes now. That's enough.
Done time.
Yeah.
The walk is over.
If you have questions that you would like to ask us, you can go to talkingrealmoney.com and ask those questions. It's really, really easy to do. You just hit the contact button and you type it, or even better, get one of these here microphone things, hook it up to your computer.
You don't have to hook. You could just use your computer.
The microphone in the computer stinks. Well, unless you have a Mac. Actually,
most people do them.
They're pretty good on a Mac.
Yeah.
They're pretty good. Good. They call them studio quality.
People don't want to go out and buy a mic to do one shot on the Don
you should have a mic
podcast.
for your FaceTime stuff.
I use the one on the computer for my FaceTime stuff.
What's that thing right there?
This is for the show, but for FaceTime, I just use the...
Yeah, but can you imagine how bad the show would sound if you FaceTime mic'd it?
With my voice, it sounds bad anyway, so it doesn't really matter. Bad is bad, so whatever.
Yeah, how did you make it this far in broadcasting? No, I'm joking.
51 years of bad broadcasting. So.
Go to talkingrealmoney.com, speak it in. I don't care what you use. Phones are great, by the way. If you use your mic on your phone, those tend to be really good.
Sure.
What else? Did you want to talk about the advisor?
No, I don't, because we're out of time. But we're always here to give you help. So.
And you can also call us on Saturdays at 855-935-TALK between 3 and 5 Eastern.
Love that.
Yeah, we forgot to mention that.
We do love that. Yeah, please.
And when you call us, let me tell you exactly what we're going to do. Here's what we're going to be.
We take your collect call?
No. Collect.
Okay.
Yeah. Do they do that? Can they even do that anymore?
I don't know. We should try it sometime.
Anyway, here's what we're going to do. Okay? When you call in, we'll be talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.